Hi, this is Michael Waits, and welcome back to India GameChanger. Real change rarely begins with a trend. It begins with conviction, acting early when the opportunity seems to be unclear, but the urgency is personal. Climate tech is no longer simply a policy priority. It's a generational investment opportunity. But how do you build an investment platform that delivers market-beating returns while reshaping the environmental future of a country like India, and frankly, the rest of the world? Vasudha Madhavan, founder and CEO of Ostara Advisors, is here to tell us how she is doing exactly that and why she believes capital, when directed with purpose, may be the most powerful climate solution of all. Thank you so much for coming to the show today. How are you doing?
Thank you, Michael. Thank you so much. That was a fantastic introduction, and thank you so much for having me. And it's great to be here.
It's my complete pleasure. Look, let's just jump right into this thing. How do you build an investment platform that not only delivers high returns, right? This is the hope for every investor, but also helps shape the future of the planet?
Yeah, I mean, absolutely. I think conviction is the first thing that goes right into it. I mean, I did not plan this journey. I did not have years of strategic thinking behind it or any, advisors, maybe some well-wishers who prodded me in the right direction. But I think my journey is really two words. I mean, one, serendipity, and two, conviction. I think these two words really sum up my journey so far. What we do, I mean, what we really, got to do, and as part of this, journey is we realize that there is an opportunity to build something where capital can actually solve for real climate and planet related challenges. And that's really what I set about doing. It really came from my inner conviction. And so I think it was a combination of my professional skill sets coming together with my conviction. So it just led me to the point we are here at today.
So serendipity is a great word, but just talk to me about this, right? Because you were kind of way ahead of a lot of people who started climate funds because it started kind of to be trendy. But when you started doing this, almost 10 years ago, if not exactly 10 years ago, like what made you identify this? What was the sort of serendipitous circumstances or moment where you said, not only am I convicted to this, not only do I have conviction about this, excuse me, but then this thing happened to me and then I had to go and do it. What was that serendipitous moment?
Yeah. So, being kind of driven by by the whole concept of sustainability is something that goes deeper for me. It is something related to my upbringing, I guess. So to a large extent, that wasn't a new concept, right? That you're careful about what you consume, you're careful about the amount of plastic you kind of throw away every day, the kind of packaging that you're conscious about. If you're purchasing something, you probably say no to the extra bag, things like that. I mean, going to buy groceries and not taking vegetables that come in plastic packages. These are little personal habits: not wasting water, switching off lights in a room that you're no longer, you're gonna leave the room. And these are things that you kind of practice as you grow up, and these are things that I was not new to. Of course, I had about 12 to 14 years or 15 years almost of investment banking experience by the time I thought of this. And it started with just reading about. I remember the first thing that I probably did was start to track companies in this space. There were startups like Ampere and Altigreen that one read about way back in 2015, 2016 timeframe, that were already innovating in the space. And then the first serendipitous encounter was really with a company, a CEO who was looking at de-risking his business, which was in the diesel engine space. So and it's an Indian company. It's an old, it's an incumbent. It's been there in the automotive ecosystem for decades, and they could see the writing on the wall. And the CEO said that this is something that we should probably be more proactive about that. The world is changing, the automotive industry is changing. And I said, we do know companies in this space. We're starting to see startup activity in this space. And it was really that serendipitous breakfast conversation with the founder, the CEO of this company, that led me to think about, oh, hey, maybe there is this chance to really look at this disruptive electric mobility technology and how it can de-risk a traditional business and also bring in a business model that is cleaner for the environment. And maybe it's time. And that serendipity really led me to kind of think more about it.
So that's actually really interesting. Did that business actually need funding to, for lack of a better term, switch gears and move out of the diesel business and into the sort of, whether it's hybrid electric vehicle or directly into the EV business? Did they need funding to do that, or could they fund it out of their own CapEx?
Right. Yeah. So this was a larger company. It was around 1,800 to 2,000 Indian crores, which is $250,000, something like that. $250 million.
$1 billion, yeah.
$250 million. And this company had capital. They had a fantastic distribution reach across India. They had more than 5,000 touch points. And they were looking to de-risk their business. So, and at the same time, serendipitously, I knew about this electric two-wheeler company called Ampere Vehicles, which I had gotten to know a little bit about from their shareholders. And that startup needed capital. So it was really a coming together of this strategic thinking by the CEO of the larger business and the capital requirements of the younger business. So they could fund it through capex, but we could see that there was a win-win situation that we could make happen between.
Wow, that's super interesting. Can I ask you this? Is there some kind of policy? I don't know the answer to this question, right? But is there some kind of policy incentive from a governmental level, right, from a country level in India that says that there will create policy to actually make this a priority for India itself?
Yeah. So these were early days, Michael. So the time frame that I'm talking about when this breakfast conversation happened and when we started to look at it, this was late 2017. And at that time, there was already this policy called FAME, subsidy. FAME is meant for faster adoption of electric vehicles, and I'm not exactly giving you the right full form of this. So the policy was really meant to incentivize the average consumer to buy EVs. And this policy already was launched by the Indian government in 2015. So there was already this policy, and this policy essentially helped producers of electric scooters, bicycles, electric three-wheelers, etc. Those were the predominant EVs in the Indian market in the early days, to really produce it and be able to benefit from the subsidy. And reduce the price a little bit and sell it to their customers. Yeah, so essentially this policy was really, I would say, one of the first incentives and a truly meaningful incentive for the curious consumer to, check this vehicle out and actually start to buy.
When do you think we reach a point where incentives are government-style incentives are no longer necessary to encourage people to go into electric vehicles? Like, when does it just become so mainstream? It feels like it's already happening in China.
Yeah.
What's happening in the United States, I don't think is really explicable kind of at any level, but I'm just curious about what it looks like in India. It's been 10 years now, not a long time sort of in the history of cars, but when do we move away from like these policy tailwinds as opposed to just like a completely sustainable business? What do you think?
Yeah, absolutely. No, great question. I mean, I think any kind of positive disruption, right?
Yeah.
Like this one, like it is disrupting the automotive industry, but hopefully in a good way. Because now you do not make polluting fossil fuel driven vehicles, but you're now trying to make these battery operated or plug-in hybrid or other technologies inside the vehicle. And this means that you're completely changing the way, changing the supply chain of the automotive industry. You're changing the way the consumer understands and drives the vehicle. The fuel that goes into the vehicle is now electricity. So you've got to change a whole range of things. You're changing the automotive industry and the handshake between the automotive industry and the energy industry, right? So all those fuel pumps are, in the medium to longer term, are not going to be as important as BP and Shell and all of these companies. So all the energy companies have to respond to this as well. So given that this is such a huge disruption and such a huge change in the automotive industry and the energy industry, policy is required. Policy is required at the beginning. When it starts to give people the right nudge, the consumers get the right nudge, and that helps. That really helps industries plan for demand, and customers to plan for their sort of consumption. So these two things have to be enabled by policy. However, no disruption or no business model can sustain for the long term on the basis of subsidy. At some point, the government is going to run out of capital for that, allocation for that, and you really have to become self-sustaining. So I think in India we've probably gotten to that point in multiple industries. I mean, I'm speaking only about the electric mobility industry, but we've also recently seen the reduction of incentives and support, even in the transfer of renewable energy, which is solar power, solar energy going from one state of India to the next, where transmission costs were being absorbed by the government. We've just recently seen the change in policy there as well as in the EV industry, where now the subsidies are coming down. And I think we are getting to the point where consumers find an economic argument for buying the vehicle, irrespective of the subsidy being that incentive.
Can we talk a little bit, just because it's interesting to me, and kind of one of my friends is peripherally involved in this industry, so he talks to me a lot about rare earths, right? Rare earth metals. Because to create batteries that are appropriate and sustainable for EVs, and it's not just for EVs, right? But for anything where electricity is involved, you need this kind of access to rare earths. What is the access to that like in India? And does India have its own reserves of these rare earth metals? Does it have to go to China? Does it have to go to Europe? Like, how does that work in India?
Yeah, so India does not have its own reserves of rare earth metals.
Interesting.
Rare earth metals are, probably contrary to the word itself, not so rare, but
Yeah.
essentially the process of refining these elements, mining them, refining them, preparing finished components out of it is a massive capex requirement, and that
Yeah.
is something that China got right. They kind of planned and invested in it decades ago, and that has helped them really capture that value chain. In some sense, that is something that most other countries around the world do not have, right? So India is no exception in that. So yes, we are dependent, on one or few countries in that sense, and it is an important element in almost in motors, predominantly in motors that go into various applications, including vehicles, and in even other applications where motors need permanent magnets, and those are made from rare earth metals. So it is definitely one of those crucial elements that come into this industry. Yeah.
I wish whoever invented this term rare earth metals had come up with like a better terminology for it, because you're right. The metals themselves are not that rare. And again, what my buddy tells me is that just the processing of them, the efficiency of saying, like, if I have 100% of X, when I'm done processing it, I only have like 1.5 to 2% of it is actually useful for me.
Yeah,
and it's very water intensive and also very processing intensive as well. So the things themselves aren't that rare, but like getting them to work, maybe that's the rare part. I don't know.
Yeah, no, that's right. I think it's more the capex and these aren't. these aren't mass, utilized, I guess, in some sense. They're very crucial,
Yeah. Yep.
little things that you put into, they're not the largest part of what you would be using from a volume perspective. Maybe, it's to do with that, why the term came about. I mean, probably interesting to research that.
So when you first started doing this, right, and when you left your corporate job, when you first started doing this, was there any pushback from people that were like, look, impact is great, but like returns in this space are going to be hard? Like, were there any questions that you had to ask yourself and say, I know this might be difficult. I know people around me are questioning sort of the validity of this, but I'm going to go and do this anyway?
Yeah. Right. Michael, climate tech was really not an industry at that point. There really wasn't an industry sector called climate tech. There was renewable that existed. We already had grid scale solar, large power projects
Yep.
that were from renewable sources and capex for that and so on. There were large players there, but that was more an asset and infrastructure play. There wasn't really. There wasn't really a startup ecosystem which was well recognized, well funded, not really, right? That was just not there. So in that sense, it was a complete, you can say it was reading the tea leaves, or it was just reading the future a little bit and making that, uh, I don't, I mean, you can say calculated leap of faith, which kind of combines the fact that you did do some thinking about, hey, is this going to be a real trend? But also it was a major leap of faith. So it may not have materialized. It need not have materialized. So there was a little bit of information, but really a lot of it was just conviction.
How would you characterize the way, what's the right word here? The environment or the perception of the funding of climate change companies and startups in the space changed in the 10 years since you started, right? Like now it's way more established, but can you feel it viscerally, this change? Is it easier to raise money for these companies? Is it easier for founders to get attention? How has that changed?
Yeah, absolutely. Absolutely. I mean, when I first started this, the first deal that I did was this acquisition, which I spoke about, where a larger company bought out the smaller company. And this was a very first M&A of its kind in this space in India. It was in the electric two-wheeler space. That was a very first, deal of its kind. Funding perspective, I could see, and this was also the time where I was meeting with a lot of different kind of founders, mostly solving for energy efficiency or automation, which led to energy efficiency, or electric mobility and various parts of the ecosystem, including battery swapping, including battery management systems, including different types of EVs, and so on. So clearly what I saw and the deals one read about at that time were 500,000 from XYZ angel network, right? That was the kind of funding deals that used to be announced at that time. So 250K or 500,000, and some individuals supporting these businesses. Very, very few institutional deals had even happened in the space. Barely, I mean, probably a couple of the famous names that, had already kind of tried really hard through the large institutional arrangers would have probably succeeded in some institutional fundraising. But overall, the environment was pretty much angel, HNIs, high net worth individuals. That was the environment. And today, if I look around me, I mean, I speak to me and my team, we engage with probably hundreds of climate investors. And whether in India or overseas, I mean, one thing that I saw then and has changed definitely is the India landscape itself. At that time, India did not have early stage, in 2015, 16, 17, there were no early stage, VC funds that were doing a lot of work. There were some that were a little bit agnostic, but were doing it. In this area, they would be the ones early stage. But today we actually see growth stage climate funds being raised in India, which means
I was going to ask you, that's exactly what I was going to ask you next, right? Can I just jump in for a second?
yeah, absolutely.
Because I want to make this distinction. It's easier, and I say this with a little bit of trepidation, right? It's easier to start an early stage fund because you don't need as much money, but there's way more risk in early stage investing because there's no traction there. There may not even be a product there. Maybe the founder's first time. Like all these things are just way more risky, which means the returns could be potentially higher.
Yeah.
But to actually sustain any sort of investment ecosystem, you also need follow-on investment and growth investment, right? Series A, Series B investment. Yes. And I'm curious how that's changed. That's what I was going to ask you, right? How has that changed? And is it palpable? Can you feel it?
Yeah. Absolutely. I think, I do not recall, in fact, that was the main problem statement that I saw, was that, hey, these companies or these startups are probably, scraping together the first 500,000 or something. What happens next, right? How do these early investors get an exit? How do these startups get the next round of funding? And really, there were no answers at that time, right? There were no funds that, I mean, the Indian VCs and the Indian private equity funds, there were probably a few that did do growth stage investments that have been around, which have been focused on sustainability, environment, resource efficiency, and these themes. But they looked at more mature companies and mature projects. They were not looking at the startups, which needed the Series A round. So that, I think today, and at that time, I had to really figure out who it was and use my networks and find those people wherever they were hiding, and really kind of go all out to find those investors. Most of them were not in India, and we had to go overseas. We had to remotely connect with many of them and so on. But really, the growth stage today is at a level where we for every growth stage fundraise, we can draw up a curated list of 70, 80, 100 investors that are all over the globe right today. So we really engage with a vast number of these growth stage investors, number one. And number two, we have really also discovered that there are now thematic funds, which means there are funds that are focused only on sustainable mobility growth stage investing, or they're only focused on industrial decarbonization growth stage investing, which means even within climate tech, we have thematic growth stage funds, which is it's a fantastic growth from where we were 10 years ago.
Can you talk a little bit more, because you've segued so nicely for me so many times during this conversation into the next thing I wanted to talk about, but can you talk to me a little bit more about the impact of global capital, right? And is there a reason why, and do you think it's going to accelerate, where global capital loses its opportunity to invest, let's say, in growth stage companies in climate tech in Europe and in North America, for whatever reason, and we can talk about that later, and say, wait a second, India seems to be the best place to do this. So how can you talk just a little bit more about the impact of global capital on what's happening in climate tech space in India?
Yeah. I mean, we've, Michael, this has really been my mission. I've put in a lot of effort and time, and we've, into this very specific thing, which is bringing in global capital into India. This has almost been my, you can say, my one singular mission over the last several years. And what I have seen speaking to these funds, many of whom, almost all of whom we've brought in our first time investors into India, is really many a time they have looked at Europe, they have looked at similar opportunities in other parts of the world, US, or even APAC, but they have not entered India because India has some unique features of, it has a lot of different unique complexities, which are not really common to many of those other geographies. So that is one that has kept them from coming in. Secondly, really just somebody showing them the right deals, right, and bringing them the right founders. I mean, that's also what has kept them from coming in. And third, it's really how will this play out and how will the ecosystem play out, and just having a thesis about it, right, about how the investment thesis. So these are the 2 or 3 reasons that global investors in the early years or over the years have kind of had that little bit of hesitation. But we've done a lot of work in this space because we've really gone and said, hey, let's write about it, let's demystify this for you, right? So we write every month research notes, research newsletters around it. We've been doing this for more than 4 years now, and this came at the request of an investor. This helped people read about it and say, okay, this is happening here. Every month I get to know something about the space, and every time we take a deal, there's a little bit of a conversation about how is India doing, what's the policy around it, how are we moving, and so on. So I think it's just a matter of building comfort. Ultimately, it's just people and building those bridges between people. Yeah.
So you had this first example about this diesel company that then partnered with this two-wheel electric company.
Yeah.
Which is a great example, right? But do you have some other examples about, because look, one of the big problems that a startup has, right, is that their customers, for the most part, are generally big established companies who are looking for a way to innovate, but haven't had a chance to, either for whatever internal reasons, right? And the first example is a great example of this. But the hardest thing is just getting your foot in the door into some of these big companies, because they feel like, if I work with company A startup and for some reason they fail, then I've invested all this time and effort into it and it didn't work.
Yeah.
And the startup as well feels like, this is my only chance to maybe make any money right at the beginning. And that's going to help sustain me until I get funded in the next round. So do you have any other really good examples about companies, let's say you were either working with, invested in, or were advising, where they either got attached to another company, or just a great founder story that you can share with us?
In terms of them benefiting from a partnership with a fund,
or just any kind of success story where, like, because it's such a tenuous situation, right? When you're an early stage startup company, no matter how much funding you have, at some point you need to have a customer, whoever that customer is, right? Whether it's a B2B or a B2B2C or a B2C, you need a customer. Do you have another success story you want to share that's interesting?
Yeah. Startups in this space, because it's such an early space and it's kind of growing and so dynamic every other month almost. There is just huge, massive amount of dynamism in the space, both from the market and from the company and the startup trying to just deal with so many changes that it's getting hit with. It's never a straight line. I mean, these journeys are never a straight line, and they just go through so many ups and downs. I think, I would say, companies, we worked with a founder in the early days where, this founder had created a proprietary technology in partnership with another co-founder on battery management systems, and he had actually created a business model where, and because battery management systems are some things that large OEMs need to use, it's really something where you're creating a component where you got to be able to sell it in the millions, right? And you got to be able to sell it to, because
Scale.
India is, again, this is important to understand as context. We are a two-wheeler and a three-wheeler market. We are not of primarily four-wheeler. Four-wheelers, cars are probably 4 to 6% of the Indian automotive sales every year.
Interesting.
Whereas 75 to 80% of what we sell every year of the total number of automotives we sell are two and three wheelers, right? So it's a very massive skew between the type of vehicles we sell. So and the two-wheeler and three-wheeler component market is uniquely characterized by thin margins, and you got to sell it in large numbers. You got to make your value really comes from volume, so in that sense, I think this founder had done a pretty good job of selling in multiple countries. He had some early customers already, which gave us that kind of. And when I got introduced to this founder, I thought that he was extremely extremely bold and able to push through and work hard and create and build in a space which was not just hardware and software and global automotive supply chain and all of these complexities that that the founder didn't have prior experience in, but just the ability to build in this space and the clarity of his own thinking around it gave me that confidence, and we were able to get him funded by some uh, early. It was again an early stage fundraise. This was again in 2020 2021. We saw that when we got him that funding of a few $1 million, it was a sub $5 million round that we did. It really went a long way in this company being able to scale up, and also very quickly be able to give an exit to their investors, because uh, this was an interesting success story where the company was able to exit their business to a large incumbent tier one, which is an automotive component manufacturer, and kind of do this in a way that it was a timely win-win strategic solution for the buyer and the seller. We were involved in the fundraise, but very soon after, the company was also able to make an exit on the back of that fundraise, and were able to grow the business enough to be attractive to a strategic buyer.
That's super interesting. Can I ask you this? There's just so much going on in the world right now, right? And for the longest time, like kind of at scale, the US has been the sort of the center of scientific research and all this other stuff, right? And I can't make the value judgment as to whether that's ending or not. But do you feel like if China has become the world's manufacturer, right, where like I can go to, Guangzhou and I can kind of get anything I want built, right, whether it's high tech or low tech. Do you feel like India is becoming the world's brain at some point? Do you know what I mean?
Yeah. So I think the data point that I read was like quarter of the world's AI engineers are in India or something like that.
Wow.
It's a massive sort of young workforce, young brain power that is currently based in India or are of Indian origin and are working elsewhere and contributing to large companies, from an intellectual and a sort of sheer innovation power that exists in the brains of our people. I think we have a we have a fantastic resource and a fantastic strength in that area. um, are we able The question is really, are we able to capitalize on it as a country, right? Are we able to use that resource of intellect, of talent, of skill, of youth, and really use that to create industries where we can stand out and win in the world? I think that question, then multiple factors come into it, in terms of enablers that exist in the system. What I read, just recently, and which gave me a lot of hope, was that the government of India is setting up. Again, I would check on the data point, but I think it's a $12 billion investment fund, uh, which is focused on innovation and R&D, and that is really meant to identify research and development projects, whether in colleges or in companies, and to really fund and back those. And that is something which is probably a very, very meaningful step. And it will still take several years for these innovations to be supported, to come out with commercially viable real solutions. But I think it's a great beginning, and it's a great way to try to attempt to unlock India's intellectual power and bring it to the market.
That's awesome. How has AI, like just artificial intelligence and its emergence? Look, I mean, you and I both know this, right? AI and development of AI has been going on for 50 to 75 years. This is not like new. It's just that its impact now, because of throughput and because of compute, has just made it, and because of all the work that's been done over the last decades, has just made it so much more powerful. How has that impacted the investments that you make? What is the impact of it on climate tech? Like, where does it fit in there? Just thematically, I don't really need stats or anything, right? I don't need to know that, but I'm just curious, like, just thematically, where does it fit in? And do you see some of your founders saying, now that I can actually employ some of this stuff, it's going to make it easier, faster, more efficient for me to build the thing that I was building anyway?
Yeah. Yeah, I think I think AI has an amazing, it has a lot of potential. Applied AI, which is really specific, either domain specific applications or just productivity applications. Uh, it has a lot of potential. Um, where do we see this? I think if I just take some examples, right? Like uh, if I look at the flow of energy or tracking the flow, let us take an example of tracking the flow of energy in an airport or in a factory. So where is it getting used? How much of it is getting wasted? What are the patterns around times of the day, or the density of people or whatever, or the usage of machinery in a factory or whatever, depending on the use case, that you can actually track digitally and manage the use of energy efficiently. I think there is just this massive opportunity there, right?
Yeah.
It's just one small example, and you can do this by picking up, using sensors and edge gateways to pick up data points from various environments, and really use AI to create closed loops, where energy efficiency can be tracked. So this is just like one example.
Are there other examples you want to give? Because those examples are actually super interesting. It's funny. We all kind of live in our own little bubble, right? So when I think about artificial intelligence, I think a lot about the LLMs and stuff. And I did have a conversation with somebody in the insurance and insurtech space where he was building models on how water moves, right? So how floods impact, both land, but also buildings and a whole bunch of other things around flooding. And his commentary to me was very similar to yours, right? Because moving water is like moving energy, right? It's just waves, and to a certain extent, right, at its core.
Yeah.
And being able to use artificial intelligence to be able to evaluate it and then predict it was actually kind of interesting, but I hadn't thought about it in the energy sector or in a factory setting or anything. It's really kind of a cool concept.
Yeah,
Yeah.
I would love to give a couple of more examples so this becomes
Please.
something that people can relate to.
Please.
I want to give maybe a couple of examples from mobility. One use that we have recently seen, in fact, it's a company that we've helped raise a Series C round, actually is deploying AI in in routing optimization and predictive dispatch of vehicles. So, how does this work? Right. So, essentially, if you have large demand of mobility, you have a large number of trips that you know are going to come up at a certain time and at a certain place. You can actually plan for it. Your AI algorithms can suggest how many vehicles are the best optimal number of vehicles to combine those X thousand trips into the least number of vehicles, and then route those vehicles predictively to those locations. This is
Super
the
interesting.
this is something that not just results in resource optimization, resource efficiency of those, even if they are fossil fuel vehicles or they are EVs. Either way, they are bringing down the number of vehicles on the road, and this makes a significant impact on this. The other example is simply things that you hear of Tesla doing, like an over the air update into your vehicle about a significantly different, or any new feature set or any new bug fix or whatever it is. All of that, that intelligence that the vehicle is giving back to the OEM can actually be done through AI, where AI is analyzing various patterns of usage or various performance elements of components in the vehicle, and saying, hey, this doesn't look right, or this is something that needs to change. So AI has just absolutely a lot of multiple applications, and we haven't probably, I mean, there's a long way to go in what we can do using this.
Was there another one you wanted to give?
No, I think those two probably are the interesting ones, that probably more in renewables and so on. But
Super interesting.
yeah.
Okay, I'll ask you one more thing and then I'll let you go. Do you feel like the current political environment, right? And we talked about it a little bit before, but do you feel like the current global political environment helps or hurts the efforts of what you're building, of what Ostara Advisors is doing?
So, I mean, the current environment in India has been extremely proactive in actually going in the direction of net zero, which our prime minister is committed to by 2070. So what we see almost on a daily basis, news flow and the kind of decisions that are being taken are really to support the further growth of industry, including renewable energy, cleaner sources of energy, incentivizing more local production of the materials that go into these supply chains, whether it's automotive or energy or any of the other areas. We are also supporting critical mineral mission. We've got the hydrogen focus programs. So we've got a lot of things that are going on, including even things like we've got regulations around using electric vehicle air taxis, which are really eVTOLs that can
Yeah.
actually become taxis for short distances within
E-plane.
e-plane, yeah, that kind of a thing. So these are a lot of areas in this are seeing support, and this needs a lot of effort, both from policymakers and from the industry to really deep dive into what are the problem areas and where can we really
Yeah.
what solve for. But I think a lot of that is happening, so no complaints really.
Awesome. Vasudha Madhavan, founder and CEO of Ostara Advisors. This was really incredible. I would actually ask you, maybe we can have some of your portfolio companies or some of the companies that you advise or some of the founders that you think are really great to come on the show. I'd love to talk to them and get to feature them on India Game Changer. I really appreciate you doing this today. Thank you so much for your time.
Thank you. Thanks, Michael. Thank you so much.